Hello and good morning everybody. Welcome to this week's Gold and Silver Club end of week review presented by myself, Phil Carr and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We will be analysing the week's performance. The live session will cover an end of week summary for gold, silver, oil and the commodity currencies. We'll be looking at our top trades of the week, live market commentary and technical analysis, the week ahead, key events looking forward, and of course any of your questions as well. So it's been an incredible week this week for the gold market, silver market, for oil market and the commodity currencies. So the big news, really, gold price hit 2.5-year low on Fed comments. So I hope a lot of you managed to catch some of this rather large move. As we saw last week, we were consolidating, and I'll show you very shortly on the live, my live screens, but we've been consolidating on gold for about 7 days or so. We finally broke out to the downside past 1,373, and since then we've had almost a 1,000 pip move. So it's been incredible, and we hope some of you profited as well. Gold and silver prices essentially ended yesterday's trading session sharply lower, hitting 2.5-year lows. We did actually see a little bit more downside overnight, although we've had a bit of a retracement today. So that was following the Federal Reserve comments. So serious technical damage was inflicted to gold and silver markets to suggest that they will still see more selling pressure in the coming weeks. And I'll show you that on the chart shortly. So yesterday the gold price fell by 6.4% to hit a new low of $1,276 an ounce. That's the lowest since September 2010, and silver declined to a low of 19.60. Actually got all the way down to about 19.40 overnight. Gold and silver prices began to fall on Wednesday after the Federal Reserve Chairman Ben Bernanke hinted the central bank could start scaling back its $85 billion per month asset purchasing program later this year. Bear in mind, this is only hinting, nothing confirmed yet. The scale backs in the asset purchasing program will only happen if the economic data gets better. So Bernanke said at a press conference following the FOMC minutes release. That was on Thursday evening, London time. Policymakers also revised their macroeconomic outlook, forecasting gross domestic product, the GDP, should expand 3 to 3.5% range, faster than the 2.9 to 3.4% estimate suggested in March, and the jobless rate is also expected to drop to 7.2 to 7.3% by the end of this year, before dropping to 6.4% by the end of 2014. So precious metal investors who own physical gold and silver, they are certainly suffering at the moment, whilst traders like yourselves and ourselves at the Gold and Silver Club once again are reaping huge profits in what can only be described as one of the most lucrative weeks of the year for traders. It's been quite phenomenal. So this week gold and silver combined has moved an average of 1,000 points, and we'll show you what we did on crude oil as well and WTI oil, creating a number of highly profitable trading opportunities, as we'll show you on our top trades of the week. So, of course, looking ahead, the big question now will be, will gold and silver prices continue to fall next week, or will they find some support at the current levels? Okay, so I'm Phil Carr, a professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil and Forex. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me is Nick Kalsi, a professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, he discovered the formula, the mindset, and tools that give any individual the definitive edge to trade in any economy. He also regularly writes for a number of global business and financial publications and has appeared frequently with myself on financial television, been on Dukascopy TV a number of times, just last month as well, giving our opinions on the gold and silver market, and here is some of our global press we've been in recently. Okay, so with that, what we'll do is just take a look and move across to the gold price right now. So gold price right now is about $1,296 an ounce. So it's quite a fall from this time last week. It's about 700 pip fall to the downside since then. So let's show you how we traded this, and really we'll go over our top trades over the last week. Okay, so top trades over the last week. Well, first of all, we've got obviously gold. So gold, this was pretty predictable in terms of a setup. You can see here, we discussed this on last week's webinar. We had been in quite tight consolidation for over really 6 trading sessions there on gold, between the 1396 level down to the 1373 level. We finally broke through that level on Monday, broke to the downside. We came down to about 1360 level. We were hovering around 1363 was the low on Wednesday, and then on the Federal Reserve comments we actually broke that level. We wanted to wait for a little bit of further confirmation, but we broke through 1363. Is very clear setup on that. Once we'd broken through 1359, where we got filled on the order, we just saw the price tumble, and this was just a case of being able to follow the move down with our stop. So you can see where the price just absolutely yesterday tanked and came all the way down to our profit target, which was $1,285 an ounce, although it did manage to get a little bit lower in the early hours last night, down to 1,269, but we're very happy with that profit. Over 740 points in a matter of 3 days on gold. So our initial risk there was 100 points. Each lot traded $1,000 US, risk for 740 points at $7,400, profit for a 7-to-1 risk reward. So really nice move there on gold. So we're now out of that sell short. Now for us, crude oil and WTI oil were very nice setups as well. So crude oil, we actually came up to this level of resistance. So between the 105 and 106 levels, been presenting quite a lot of resistance for crude oil in 2013 so far. We had we really ran out of steam on this rally. We had a couple of days in a row there highlighted where we had those inverse hammers. We started to see quite a lot of resistance, and again, just on the Federal Reserve comments, this is when we got confirmation of a short. We love, as a lot of you who join our webinars often, we do like trading the news. We like to trade non-farm payroll. We like to trade Federal Reserve announcements, and this is good testament to why, really. I mean, we've racked up over 1,000 pips this week alone from that announcement. So it's well worth, if you know how to trade the news, if you know what the fundamentals mean, especially for the commodities, you can make a lot of money. So this is crude oil, so selling at the 105.87 level. You can see my entry on the chart there. And we put quite our profit target was 102.02, which is quite a lot to ask for the trade in such a short range. I mean, by about midday yesterday, the price had got to around 104. So we were up over 250 odd pips, and we were kind of looking, thinking, you know, whether we should start banking, taking some profits off the table. But we started to break through a Fibonacci at 103.69, and the price just steadily throughout the afternoon up until early evening hit our profit target, which was just above 102, which is a previous level of support. So 385 pips in less than 24 hours on crude oil, so really nice trade there. So the risk on the trade was 75 pips for one lot, $750, risk for 385 pip rewards. So we made $3,850 on each lot we traded for a nice 5-to-1 risk to reward there on crude oil. And WTI oil was actually even tighter. A little bit tighter risk to reward on this one, but WTI was doing very much the same in terms of setup. You had a more clear level of resistance there around the 98.45 level. You can see 1, 2, 3, 4. This was the fifth test of that level. We did get a kind of a breakout which didn't it didn't carry through, so it broke up to about the 99 level, and that was a great opportunity to look for a sell short, because we started to see this market fall just on the Federal Reserve announcement. as well, so got in at 98.45. We didn't take as much on WTI as we did on crude. We wanted to bank some of our profits, so we came out at 236 pips there and let the crude oil trade run to its full capacity there. So 71 pip risk there, 710 US dollars risk for $236 profit for 2,360 on each lot traded for a nice 3-to-1, which I'm sure you agree over a 12-hour period it's always good to be able to bank these and keep your trading account ticking over nicely. Okay, so good, and there's some questions coming through. Okay, you've got that. Yeah, just why the circles on the chart. Yeah, that's just showing the setup which we traded off there. Mr. C, your question answered. Okay, great. So what we're going to do now is we're going to look at some live technicals now, so we see what the charts after that big sell-off yesterday. There are some interesting setups or some interesting markets you can start having a look at today, more so on the commodity currencies actually, which are looking quite interesting today. So with that, what we do, actually before we do that, what I'll do, I'm just going to show you, you need to see my screen first, so let me get my screen sharing for you. Okay, so bear with me 1 second while we share screens. Okay, so the first market I want to show you, this is a Reuters, this is just a screenshot of my Reuters platform. So here you'll see to the bottom right here the US dollar index. So US dollar index very inversely correlated to gold, silver, some of the commodity currencies, Australian US dollar, New Zealand US dollar, USD Canadian dollar tends to move the same direction as the US dollar index. And what you'll see there is we did have that big breakout over the last couple of days, so we found support at the 80.50 level, and we rallied all the way up to just about 82.50 there. On the US dollar index, so big move on US dollar index, and we've seen big sell-offs across the markets. At the moment, we're starting to stall a little bit. You've got like a doji at the moment, which is indicating a bit of indecision. So as we start to get a bit of the rally on the US dollar index is starting to run out, now we're starting to see support in gold, silver, commodity currencies, and we're starting to see some support this certainly this morning. So I'll be interested to see if the US dollar index is going to be able to continue this rally today, or whether we're just going to start to get a bit of a reversal, get some profit taking there, and whether that's going to see a bottom in some of these markets. So we'll take a look at the technicals there. Okay, so first market I really want to have a look at, this is the crude oil markets. As discussed, here we have the 105 level, 105.85, around about that level of resistance. So we can see here where the price was very much just starting to run out of steam. We've got a couple of nice inverse hammers there actually just at that level of resistance, and it's just on a daily time frame, and you can see there where the price just ran out of steam. We then broke down on the Federal Reserve announcement, and over the course of yesterday, more than we could have asked already, a nice 339 pip move all the way down to that 102 level of support there, and we've seen some buying coming in at that price at the moment. So what I'd be looking at now, yeah, we may find that we get 102 level get supported and we get a rally back to certainly the 105. Could happen, we get a rally back to the 105 level. At the moment, this is a bit neutral for me. I'll be interested to see if we're going to break down, come back down to the 98 level, or whether we're going to find support at 102 and come back to the 106 level. But for the time being, this is in the middle for me of two key support resistance levels, so I would just be watching it carefully, see if 102 provides some support, just going to the tighter time frames. And yeah, you can see with that 102 level it has provided some support, just chopping about a little bit there. Can see that's a bit of an inverse hammer forming on 4 hours. So for me, we've obviously come out of profits of that, and we're watching closely to see if we're going to get a breakdown or a relief rally now. Okay, moving across to WTI oil, very much same situation. We came down actually to around the 94 level, and you can see we found some support at that particular level, so there's no real reason why we should get support at that level. So we've got a little bit of support going back to September 2012, but we're certainly seeing probably some profit taking from the shorts there. Again, I'd be interested to see if the price does come back down to test around the 90 level on WTI oil, or whether we get some buyers come back in the market and push this back up to resistance around the 98 level on WTI and Brent. So for me, the move's already happened on WTI and Brent, which was over the last couple of days. So, but I would still keep an eye on them. So looking at gold, so gold did find some support around the 2060 level. There is a key Fibonacci extension around $1,276 an ounce, where you can see we've actually started to find some support. By the way, this what looks like a very tall hammer with a very long tail, it's a charting issue there, that should actually show a very large red engulfing, a red bearish candle there, so just bear that in mind for gold. So we've had a big move to the downside. We'd have to go into the tighter time frame really to see what's going on. So you can see here where we got the bounce off the 1,276 level, broke down a little bit further to 1,269. That level has been supported. You can see there today that we've moved about, not massively, about 200 pips up since we've started to bottom out there a little bit, but that could just be purely down to profit taking. We do have some chart damage on the certainly on the gold chart at the moment. So where I would be looking at in terms of price was to continue to sell off, I'd be looking at key levels which are going to be below. So these are going to be at $1,265 an ounce, $1,253 an ounce. Just some analysis we've done a little bit earlier, which would take you to the resistance levels of 2010 and $1,227 an ounce as well. So if we continue to break down, those are the really key levels I would be looking at. We're in the short term, okay, so if we 1250 is a key level, 1253, 1265, 1227. Those are the prices I'll be interested in looking if we're going to get a lot of buying coming into the market. Really on gold, I want to see more of a capitulation, which is where the price comes down, gets fiercely rejected, institutions and investment banks start getting interested in this market, then it's worth getting in. What we're seeing today looks to me more like profit taking, as opposed to we've bottomed out on the gold market at the moment. So I'll be very, very cautious. I find it in long at the moment, unless you're more of a day trader and you can just get in and out fairly fluidly of these trades. I certainly wouldn't necessarily be keen on holding a position over the weekend, but it's entirely up to you. Okay, so that's what we're looking at on gold. Silver, very interesting actually. Silver came and bounced off 19.40, which interestingly was a key resistance level going back to 2010. So clearly finding some clear levels of price action there. So 90.40. We had a bounce off that level overnight. We haven't moved massively since then, in all honesty. So it probably, again, that was probably just a target for short sellers, the 1940 level. We're seeing a bit of a relief on the sell-off at the moment. Again, we've got technical damage at the moment, very much in a downtrend on silver. Key levels to be looking at really below that would be 1875, and a break of 1875 we could actually go all the way down. I would put in terms of the lowest point where we could see the price get to, for me that's going to be around the 16 level, 1610, but that's only if we do see another big wave down. But I would expect some buying at the current level where we are at the moment, but we're not really seeing institutional buying, we're probably seeing more profit taking at the moment. So certainly a lot of weakness in gold and silver at the moment. So I'll be looking at potential the market to put in a bit of a relief, and possibly other sell shorts. Other sell shorts may get triggered if we get the price just come back within this very clear sort of downward trend. You can start to draw on this. Okay, so we may get the price just come down. Sorry, maybe get the price just come back up within that trend channel and test around the 21 level before we get more shorts coming in. For me, the gold and silver move at the moment has been done already. The real opportunity was to sell short these markets over the last couple of days off the Federal Reserve. So I would now turn my eye to more the commodity currencies. So USD Canadian Dollar looking quite interesting at the moment. So if you go to USD Canadian Dollar, you can very simply go on the daily time frame or the 4 hour. We've come up to this key level of resistance around the 103.6 level. So you can see this quite key level 1, 2, 3, 4 times. This has been fairly significant resistance. We are seeing, you can see there, we've got a bit of a hanging man start to form there. So shooting It is more of a hanging man we've got there at the moment, which indicates we might be running out of steam there. So I would be interested to see on this market, just dropping down to the 4-hour time frame, to see whether we are now going to get a bit of a sell-off from this level of resistance, whether the US dollar index is going to start to sell off, and if we see the price break below the 1.0362 level, we'll be interested to see if the price can come back down to 102.65. So that's a potential scenario. Like so. So I'll be watching that very closely today on USD Canadian Dollar, or whether we can break out of these 1.0414 level, which has presented a lot of resistance on the USD Canadian Dollar, just going back over the last really 18 months or so. So be watching that quite closely, but I'm watching USD Canadian Dollar with interest currently. Also, if we move across to Australian US dollar, you have to break that into put that down to 4-hour time frame. So you've got a little bit of consolidation now. So we seem to have bottomed out for the short term around the 0.916 level. You can see a nice hammer there, which has started to get build a little bit of ground. Nothing spectacular, but we're starting to see the price consolidate and start to get a little bit of a lift at the moment, as the US dollar index is seeing a bit of weakness this morning. So Australian dollar, US dollar, there's no real key levels of support where the price is at the moment, but we are seeing some consolidation and the price starting to get a bit of a lift this morning. Moving across to New Zealand US dollar, similar situation really. We seem to have found a short-term bottom around the 0.7716 level. We've got quite a strong hammer, Dragonfly Doji, a hammer there, and then we're starting to see the market. There's a bit of indecision actually, because of this candle here on the 4 hours, also an inverse. So just chopping around a little bit, trying to form a little bit of a base, probably a New Zealand US dollar. I'd rather look at Australian US dollar and USD CAD at the moment. And just if we zoom out a little bit, you can see some of the technical damage really that's been done. We broke, we just continue to be in a downtrend really on New Zealand US dollar, and you can see that quite clearly where we made new lows for 2013, new 12 months lows just yesterday, as we did on most of the commodity currencies there, and gold and silver. What else would we like to look at? Pound. Actually, bear with me. We'll just move across to. Yeah, the only other derivative really of the commodity currencies, and the reason we're looking at the commodity currencies is because of the relationship that they've got with gold and silver. So it's no coincidence, for example, that Australian US dollar and New Zealand US dollar, Australian US dollar has reached over 3-year lows, New Zealand dollar over 1-year lows, the same time that gold and silver have reached over 2.5-year lows. So they're very strongly correlated. USD Canadian dollar got a lift when the rest of the market was selling off, as due to that inverse relationship. And Australian dollar, Canadian dollar here, we're seeing, you've got quite a strong, we got hammer there on the daily time frame. We're starting to see a little bit of a lift on this market, although overall downtrend, very difficult to pick a bottom in a market like this. But you could get it for, day trades. If you're more fluid with your trading, in and out quick, that might be a market you want to take a look at. Okay, so with that, let's just move across and see if there's been any questions, guys, and then we'll move on to the news for the week ahead, okay? Okay, so just going through your questions. Yeah, if there's any markets you want to look at, more predominantly the commodity currencies and gold, silver and oil, guys, but if we can have a look at US dollar, Swiss franc, yeah, we can have a look at that one. Okay, and Lalit, you're just asking about the resistance. We'll speak to you afterwards about that, Lalit, that's not a problem. Let's have a look at US dollar, Swiss franc. By the way, big welcome to Lalit from India. Good to see you on the call. Okay. Great. So looking at US dollar, Swiss franc. Okay, so this is a market we were actually looking at last week as well. We had a level of support around the 0.9129 level. We had a really nice dragonfly doji, as it's known, or nice hammer with a long tail at this particular at the 0.9189 level. And we got a nice move on the Federal Reserve investment, same as USD CAD, where we've got a quite a big move to the upside. It was about 120-point move, and we actually got out of that nice 2-to-1. That was more of a day trade on that particular market. Right now, on USD Swiss franc, just seeing a bit of indecision there. You've got a doji. Previous day's trading there was a doji as well. For me, it's not at a kind of key price level where it is at the moment. It's just a bit of indecision at the current price. So it's not really one I'm going to be watching too much over the course today. Be more interested if it comes back down to support currently. Okay, good. Right, so just to answer a quick question there from, I think, Mr. C, just talking about QE there. I believe you're just, you're relating to the quantitative easing slowing or stopping, I believe, just talking about the reality after all the QE, gold and silver price falling. I mean, essentially the reason, as a lot of you may know, the reason for the big fall is because Ben Bernanke and the Federal Reserve, they have hinted that, or mentioned that they are looking to stop the QE program next year on the basis of a better economy in the US. So that is why we got such a big move across the gold, silver, crude oil, that they all sold off. The US dollar index really found a lot of strength. Okay, fantastic. So what we're going to have a look at now, we're going to move across to the news for the week ahead. And before we do that, we'll answer one more question for you guys. Let's have a look at the gold and silver. Tell you what, guys, because we're moving towards 11:30. We can't give specific. I'm seeing your question there to all participants there. Yeah, regarding your stop losses on a short order. We're not. We can't go into any sort of detail on your particular trade setups there, where you should put your stops, where you should put your take profits. But take a look at the news ahead, and this should help you to get an idea of what news that we've got this afternoon, which could certainly affect some of your trades today. Okay, so the key news for the week ahead. So first of all, we have further news this afternoon. Friday at 1:30 p.m. we have the CAD core retail sales. So the CAD core retail sales, this is a measure, the change in the total value of sales at the retail level in Canada, excluding automobiles. It's an important indicator of consumer spending, and it's also considered a pace indicator for the Canadian economy. So that will certainly affect the USD Canadian dollar this afternoon at 1:30. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. On Monday, 24th of June next week at 9 a.m, we have the German IFO Business Climate Index. That index rates the current German business climate and measures the expectations for the next 6 months. It is a composite index based on a survey of manufacturers, builders, wholesalers, and retailers. A higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. And that's important because the gold is correlated, the euro is correlated to gold. Next Tuesday at 1:30 p.m. we have the US Core Durable Goods Order. That measures the change in the total value of new orders for long-lasting manufacturing goods, excluding transportation. So high reading indicates increased manufacturing activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Next Tuesday at 1:30 p.m. we have the US new home sales. That measures the annualized number of new single-family homes that were sold during the previous month. That report tends to have more impact when it's released ahead of existing home sales because the reports are very tightly correlated. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Next Wednesday at 1:30 we have the US GDP. Now that measures the analysed change in the inflation-adjusted value of all goods and services produced by the economy. It's the broadest measure of economic activity and the primary indicator of the economy's health. Higher than expected readings should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And we have next Thursday at 1:30 p.m. we have the US personal spending, and that measures the change in inflation-adjusted value of all spending by consumers. So consumer spending accounts for a majority of overall economic activity. This report tends to have a mild impact as government data on retail sales is released about 2 weeks earlier. Higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Okay, and so that's all the key news that you want to be looking out for. So we just to address some of the questions that have come through, guys. So we've got some questions with regard to positions. You've got open positions in gold and silver. Okay, and looking for stop losses and take profit levels. Right, in terms of any specific question, guys, relating to any trades that you might be in like that, best thing to do to request information is just to send us an email or request information on our gold, silver and commodity courses and our live trading programs. You can very simply just go to www.jointhegoldandsilverclub.com or contact us at email office@thegoldandsilverclub.com. Of course, you can also telephone us on 0207 193 0403 or 852 8191 81910403. And again, you can go to www.jointhegoldandsilverclub.com, and very simply, once you go on that form to complete that, you just go to the top left-hand corner to find the form, and once you've completed that, we'll send you additional information. And of course, to subscribe to our newsletter, you can go to www.thegoldandsilverclub.com to receive free weekly gold, silver, oil and commodity currency news, live market analysis and prices. So do make sure you take advantage of that. So what we'll do, we'll see you back here same time, guys, next week. Good luck for the rest of the day's trading. Good luck for the week ahead. We hope you caught some of the profits this week. And if you do have any specific questions that you'd like answered today, just get in touch with us on the contact details on the screen. Okay, great. Well, take care, everybody, and we'll see you on the next one, okay? Great. Bye-bye.